Welcome to the Edge of Tech, CTech's AI-generated studio, where we dive deep into the latest news and analyses on technology and innovation. Today, we're starting with some big news from Intel. The tech giant is making significant cuts to its workforce, affecting thousands of employees. Next up, we'll discuss Pagaya's latest move. They're expanding their reach by acquiring the asset firm Theorem in a deal worth tens of millions. And lastly, we'll talk about Faye, a fintech platform for travelers that just secured $31 million in Series B funding. Stay tuned for these stories and more, right here on the Edge of Tech. I am Elihai Vidal, generated with AI. Joining us to discuss the significance of the news are Ariella Carmel and other guests, all generated with AI. Here we go. Today we're discussing Intel's latest round of cutbacks and the potential impact on the company's future. Ariella, with Intel planning to lay off thousands of employees to free up budgets for recovery efforts, how do you see this affecting the company's trajectory?
Well, Elihai, based on the Bloomberg report, Intel aims to reduce costs and invest heavily in research and development to regain market share lost to NVIDIA's AI chips. This involves potential layoffs and significant capital reallocation.
With Intel's previous layoffs and revenue challenges in mind, how do you interpret the significance of these cutbacks in light of the company's future goals?
Under CEO Pat Gelsinger, Intel is investing heavily in R&D and its foundry activity. This could potentially turn NVIDIA from a competitor into a customer. These initiatives require tens of billions of dollars, and the planned layoffs are part of freeing up additional capital for these investments.
Looking ahead, Intel's plans to increase revenue and investments signal a shift in strategy. How do you think these changes will impact the company's overall performance, Ariella?
Elihai, Intel is expected to publish its second quarter report for 2024 soon. While revenues should match last year's corresponding quarter, analysts expect a modest 3% increase to $55.7 billion in the second half of the year. This would be the first time since 2021 that Intel reports an increase in revenue.
Before we wrap up, Ariella, any final thoughts on Intel's restructuring and future prospects?
In conclusion, Elihai, Intel's strategic decisions reflect a commitment to adapt to market dynamics and drive long-term success. The upcoming changes may pave the way for a more competitive and innovative Intel in the future.
Thank you for your insights, Ariella. Coming up next, Israeli company Pagaya acquires American firm Theorem in a deal valued at tens of millions of dollars. Now we're diving into the news of Pagaya acquiring asset firm Theorem in a deal valued at tens of millions of dollars, despite the crisis in the consumer credit market. Pagaya's move to acquire Theorem, an American company managing assets worth $1.5 billion, seems to be a strategic decision. Ariella, can you tell us more about this acquisition?
Well, Elihai, Pagaya's acquisition of Theorem is a bold step amidst the consumer credit market crisis. This deal is valued at tens of millions of dollars, and it will significantly increase Pagaya's asset portfolio to $3 billion through its credit funds.
Moving on to the impact of this acquisition, Ariella, how does this reflect on the current state of the American credit market, especially with the high interest rates affecting investors?
Indeed, Elihai, the acquisition showcases Pagaya's confidence in the American credit market despite the crisis. The high interest rate of 5.5% has caused challenges, leading to redemptions in Pagaya funds. Investors are facing limitations on withdrawing their investments fully.
Looking at the broader implications, how does this acquisition position Pagaya in the context of the current challenges faced by the company and the market?
Well, the acquisition of Theorem comes at a crucial time for Pagaya. Despite recent layoffs and frozen funds, this move signifies a vote of confidence in the consumer credit market. It shows Pagaya's commitment to expanding its operations and navigating through challenging times.
Before we wrap up, any final thoughts on how this acquisition might shape Pagaya's future strategies?
In conclusion, Pagaya's acquisition of Theorem not only reflects its growth ambitions, but also signals a resilient approach to market fluctuations. It will be interesting to see how this move impacts the company's trajectory in the coming months.
Thank you, Ariella, for shedding light on this significant acquisition by Pagaya. Coming up next, Faye raises $31 million Series B for fintech platform for travelers.
Today we're talking about Faye, a travel startup that just secured $31 million in Series B funding, led by Portage. Andrew, what can you tell us about Faye and their platform?
Faye is a comprehensive platform for travelers, offering travel insurance, 24/7 assistance, real-time trip monitoring, and fast fintech solutions.
It sounds like Faye has a lot to offer. Why is this significant in the market?
The challenge in the market is that most Americans are not aware of travel insurance. Faye aims to address various traveler problems, focusing on the consumer experience and providing immediate financial solutions.
Understanding the market need is crucial. How does Faye tackle this challenge?
Faye offers a complete platform for travelers, providing solutions for finding flights, handling emergencies, and offering a digital wallet for immediate claims payment. Their focus on consumer-centric services sets them apart in the industry.
Solving these travel challenges is key, and Faye seems to be making a real difference. Thank you, Andrew, for sharing your insights.
That concludes today's edition of The Edge of Tech, CTech's AI-generated studio. Thanks for tuning in. For more high-tech news, in-depth analysis, and exclusive interviews, head over to CTech website, your gateway to Israeli tech.